Hi, welcome back. Well, this is the earnings corner now. Wipro came out with its second quarter numbers post-market hours and the firm largely met expectations while revenue grew at over 4% and margins crossed 15%. The company expects growth in quarter three to be modest. Rima is joining us with the details and the analysis as well. Rima?
Thanks so much for that. So Q2 for Wipro was largely in line with expectations. No positive surprise, unlike in the case of TCS. Constant currency revenue growth at 4.1%, right within the company's guided band of 3 to 5%. Margins on expected lines have expanded by about 16 basis points to 15.1%. But the miss is really on the Q3 guidance. That's the December quarter guidance. They're just guiding for a revenue growth of about 0.5 to 2%. And this is lower than consensus expectations. Some positives in the numbers. The deal wins are fairly healthy. They've gone up by 43% in the first half of the year. Attrition has ticked down even further, so that's a positive. But I think the street could be disappointed by the guidance for the next quarter. So at a time when TCS reported a good set of earnings, HCL Tech has upgraded its revenue guidance. For Wipro, I think this revenue guidance is going to come in as a bit of a miss. So although the valuations for Wipro are relatively cheap, this unexciting guidance could keep investors on the sidelines.
So Wipro, but Rima, modest outlook from Wipro, well, that's clearly not the case with HCL Tech. What were the numbers looking like?
Well, Q2 is good, bang in line with street expectations. The company's reported a constant currency revenue growth of 3.8% in line with expectation. Margins have come in ahead of expectation. EBIT margins have expanded by 100 basis points to 18%. We were penciling in only a 40 basis points improvement in margin. Deal wins are solid. They've gone up by 16% on a quarter-on-quarter basis. And the sweetest thing in the numbers is the fact that they've raised the full year revenue guidance. The earlier revenue guidance was 12 to 14%. It now stands at 13.5 to 14.5%, which means at the lower end, the company's raised the revenue guidance by 150 basis points. And it also means that HCL Tech is going to surpass the kind of growth that it had compared to last year. So it will be one of those few IT companies where FY23 growth is going to be better than FY22. They've lowered the margin guidance. Earlier 18 to 20%, now 18 to 19%. So the bottom end of the guidance remains the same at 18%, but the upper end has been brought down. This should not disturb the street at all because one, the actual estimates on the street were closer to 18%, and two, the company themselves had guided for their margins this year will be at the lower end of the guidance, which means anyway the street was working with margins to be closer to 18 to 19%. So this decline in the upper end of the margin guidance should not cause any nervousness in the street. So all in all, it's a good set of earnings coming through from HCL Tech. Q2 margin beat, revenue guidance upgrade comes in as a positive surprise.
Okay, all right, Rima, thank you so much for joining us with that analysis. In fact, we are also joined by market expert Prakash Diwan to decode these numbers with us. Prakash, good afternoon. Thanks a lot for joining us. Well, you heard Rima, while Wipro gave a modest outlook, or the outlook in terms of their growth guidance was quite muted, but that's not the case with HCL Tech while the numbers were in line. What is your first take?
No, I think honestly, I could catch quite a bit of what Rima ran us through because of a patchy line. But the first look at the numbers very clearly do tell us that it's very much in line, or probably even slightly better than what was expected. So from that perspective, it's kind of numbers that do give you some sort of a respite. Given that we went into earnings for this particular name with very low expectations of, a set of numbers that were expected was pretty weak.
Okay, Prakash, the line actually is very patchy, so we'll try to reconnect with you and get your take on the numbers as well. For now, Wipro inline set of numbers, the guidance is quite modest, not in line with estimates. However, HCL Tech's guidance definitely beat estimates, and that is something that the street will like tomorrow. So, of course, the reaction on these stock prices is something we'll be watching out for. But banks will start coming out with their second quarter numbers soon, and loan growth for the sector is at a multi-year high. Abhishek Kothari is here with the details. Abhishek, expecting a good quarter for banks this time?
As you mentioned, the loan growth of banking sector has been one of the best loan growth in a while. So the loan growth for the sector in Q2 FY23 was at a multi-year high of 16.44% YOY and around 4% sequentially. There has been business updates which have come in from few lenders, which shows that, private banks have gained market share on the back of strong loan growth momentum from the PSU banks, that they have gained market share. So RBI has been, raising the interest rates. So banks have also raised interest rate in Q2. So you can expect net interest margin of the banks to remain stable or improve on a sequential basis, given the fact that they have also raised interest rates. Asset quality will not be an issue. We may see improvement in asset quality with lower slippages this time around and better recovery. Large part of the slippages that may get reported will come from restructured book. Credit cost or provision for NPA divided by the advances ratio will be lower on a sequential basis, that is quarter on quarter, for majority of the players. Now PSU banks will not see a huge reversal in the treasury losses that they had in Q1 FY23, although many had guided for the fact that 50% of the losses that they had in Q1 may get reversed in Q2. We may continue to see private banks investing in their franchise, which may keep their operating expenses on the higher side. We have some of the estimates coming in from Kotak Securities. For SBI, their estimate of NII is a 7.5% growth both YOY and quarter on quarter, while net profit they estimate a growth of 52.5% YOY and close to 92% sequentially. For SDFC Bank, Kotak Sec has an estimate of NII growth of more than 17% YOY and about 6.3% quarter on quarter, while they are expecting a profit growth of 27.5% YOY and about 22.5% sequentially. For ICICI Bank, the NII estimate is a growth of 18.7% YOY and about 5% sequentially, while profit is expected to grow more than 35% YOY and close to 8% sequentially. For Axis Bank, the NII estimate by Kotak Securities is a growth of close to 27% YOY and about 7% sequentially, while profit expectation is a growth of 46.5% YOY and more than 11% sequentially. Back to you.
Okay, all right, Abhishek, thanks a lot for joining us with that analysis. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.